The gentleman from Illinois, Mr. Dold, is recognized for 5 minutes.
Thank you, Madam Chairman. If I could, Mr. Stevens just had a quick question for you. I think you said during your testimony that about 1/3 is the market share that the FHA has right now in terms of single-family lending at this point in time. Is that correct?
Actually, it's dropped. The current market share levels are closer to 20% today.
Closer to 20%?
Yes.
What is the optimal market share in a normal market?
You know, it's having looked back, and I'd be glad to share with you as a follow-up and sit down and go over market shares of history of FHA. It's ebbed and flowed over the years. The traditional market share should be, has traditionally been somewhere in the 10 to 15% range. I do think it's important, however, to recognize, and let's just use one different market correction, the oil patch crisis. FHA's overall market share remained in the teens, but we were as much as 40% of the market in states like Colorado, Texas, and Oklahoma during that period, but the overall national market share was able to remain very low, and again, that's more of a normalized market.
What policy changes would you recommend for this body to be considering to promote a more healthy role for the private sector or private capital in mortgage finance?
I very much look forward to that dialogue. I would like to share with you just our market share just on the policies we've taken over the last couple of years. 3 mortgage insurance premium increases, changing FICO requirements, changing actually underwriting policies of programs. Our market share from first quarter of 2010 to fourth quarter of 2010 per Inside Mortgage Finance dropped from 24 to 14% in the fourth quarter, 14.8. Now that's their data, but we've already clearly seen a reflection of the policy changes we've implemented to reduce our share of market. As I said in the opening comments to the chairman, that there are several levers we can work on, but clearly pricing the risk appropriate to the mortgages we are insuring is a critical component. I think we've done an outstanding job with the help of Congress in giving us more authority.
What do you deem in the next 18 months will be success? If you're able to accomplish, or we get, what part of the private sector in, what will you deem as success in the next 18 months for FHA?
I think I would encourage us all as we're working together on this process to make sure we don't act too quickly with the absence of private capital. I'm a huge supporter of private capital. It's my entire background coming into the market.
That's why I'm asking.
But I would say this, ultimately the policies we put in place, and as I said earlier, we're going to have test points along the way with loan limits will be probably, is my estimation will be the next round along with these price changes we've currently put into place. We will see how private capital is re-engaging. Assuming a normalized rate of re-entry of private capital in the market, I think we should strive to get FHA's market share level back down to its more normalized market share. As I quoted our fourth quarter data, we actually could be on a trend getting back closer to that level than the levels we've been at for the last couple of years. And all of that I think we need to be sensitive about, and I would love to have an ongoing dialogue with all of you, and you specifically as you're interested, to talk about what's happening in the market more broadly so that we don't create this double dip or an unnatural outcome that could harm families even worse.
Some have suggested, and again, I'm sorry to continue to focus on you, Mr. Stevens, and I apologize to the other panelists, but and please chime in if you feel it necessary. Higher down payments have been talked about in terms of asking homeowners. We've seen it, going back to previous generations. They saved, and they had to put down 20%, and that obviously, was a big difference, I think, in what's going on today as we've seen those capital requirements for down payments drop significantly. Mm-hmm. What are your thoughts with regard to requiring additional capital for home buyers?
So, if I could answer it this way, I've been doing this for 3 decades in the finance system. I bought my first home with an FHA loan back in the 70s with a 3% down payment, believe it or not, because they did it the same way back then. The problem ends up being if you have too broad a box that you can originate FHA loans in, if it covers too broad of the market, people are going to naturally use that program even when they could come up with a larger down payment, and they don't necessarily meet the original objective of FHA. I do think a small down payment provides a value, particularly for underserved families who may not have the additional disposable income to save up, virtually trapping them in a world where they can never become homeowners because they'll never be able to save for a down payment, even though they have a good job, they have a family, and they can afford a home. So targeted assistance in those markets, I believe, should continue over the long term, but I do believe, if it's the trend of the questions you're asking, that we clearly need to contain and reduce the footprint of FHA over time safely, but we do need to reduce the footprint so it isn't playing the kind of role it is today and perhaps providing financing at low cost to families who could otherwise come up with the down payment.
Gentleman's time has expired. The